Wall Street is whispering something again.
Uh-oh. What is it this time?
$100 oil.
Yeah, that number again. Whenever analysts start whispering about triple-digit oil prices, something big is usually happening behind the scenes.
So what triggered it this time?
Geopolitics. More specifically, tension between the United States and Iran.
Oh, great. Geopolitics again.
Markets hate uncertainty, but oil markets hate it even more. Because when politics gets messy, energy prices start moving fast.
Okay, but why are oil traders suddenly so nervous?
Here's something most people do not realize. A huge portion of the world's oil supply comes from the Middle East. And whenever tension rises in that region, traders start pricing in risk.
Pricing in risk. What does that mean?
It means even if nothing bad has happened yet, traders assume something might happen, and prices start climbing before the crisis even begins.
Energy markets react to possibility, not just reality. So they are basically preparing for the worst.
Exactly. Now look at this tiny strip of water on the map. This might be the most important oil route on the entire planet.
That little waterway?
Yes, it is called the Strait of Hormuz. Around 20 million barrels of oil pass through this route every single day.
That is roughly 20% of the world's total oil supply? Wait, 20%? So the global economy depends on that tiny passage?
Pretty much. Think of it like the Wi-Fi router of global oil. If the signal drops, the whole system glitches.
Has anything like this happened before?
Oh yes, history has seen this before. Back in 1973, during the oil crisis, prices exploded. Oil prices quadrupled in just a few months. Gas stations ran out of fuel. People waited for hours in long lines just to fill their tanks.
That sounds insane.
Entire economies slowed down. Inflation surged across many countries. And that crisis left a deep scar on global markets.
That is why today traders react quickly whenever geopolitical tensions appear near oil routes.
That is the crazy part. Oil does not just affect gasoline. It affects almost everything in your life. Shipping costs increase, airline tickets become more expensive, food prices rise, even online deliveries become more costly.
So expensive oil basically means expensive life.
Exactly. Oil is like the bloodstream of the global economy. When oil becomes expensive, the entire system feels the pressure.
So what are traders watching right now?
Right now, traders on Wall Street are watching three key things. First, possible supply disruptions. Second, the safety of oil tankers moving through the Persian Gulf.
And third, whether political tensions escalate further. If none of those situations spiral out of control, oil prices may stay stable. But if even one domino falls, $100 oil could arrive faster than people expect. So, what do smart investors do during moments like this?
They do not panic.
They watch the data carefully, and they remember one important rule of markets. Every crisis in history created both losers and winners.
So the real skill is not predicting chaos.
Exactly. The real skill is staying rational when everyone else loses their mind.
Markets panic.
Smart investors prepare.
And that is what we are here for.
Finance made simple.
Welcome to One Bowl Finance.